All right, next we're going to do a practice question. So these financial statement items are for Bay Truck Corporation at year end July 31st, 2015. So based off of this data set over here and this data set over here, I want you guys to prepare the classified balance sheet or the statement of financial position. So essentially for us to get to the statement of financial position, we have to do the other two statements first. However, I'm not expecting you guys to do that in this video, just because the main focus of this video is the classified balance sheet. So I went ahead and given you the numbers from the income statement, which is the net income figure. Remember, revenue minus expenses is going to be the net income figure. Then the statement of changes in equity. The two main figures that we need from there are the common shares ending balance, which is 10,000, and the retained earnings ending balance, which is 36,540. So I want you guys to pause the video right now, attempt to do the classified balance sheet on your own, then resume it and mark it as I go through the step by step. So to kind of dive into this question, let's talk about each account and kind of expand on each account. So salaries expense is that of an expense. It goes onto the income statement directly. Utilities expense is an expense. It goes onto the income statement directly. Equipment is a future benefit. This is an asset, and this is going to be part of property, plant, and equipment because it's long-term in nature. Accounts payable is a liability. Accounts payable is usually within 1 year. Not usually, it always is within 1 year. So that's always going to be a current liability. Service revenue is a revenue, goes onto the income statement. Rent revenue is a revenue, it goes onto the income statement. Common shares, is a shareholder's equity account. It goes onto the statement of changes in equity and the balance sheet. Cash is an asset, it's a current asset on the balance sheet. Accounts receivable is a current asset on the balance sheet. Accumulated depreciation equipment is attached to the equipment account and reduces its value. So meaning that is going to be, that's a contract account. So that goes directly onto the balance sheet under property, plant, and equipment. Interest payable is a liability, a current liability on the balance sheet. Supplies expense is an expense on the income statement. Dividends is a shareholder's equity account. It goes directly onto the statement of changes in equity as it reduces our retained earnings balance. Depreciation expense is an expense on the income statement. We have the beginning balance of retained earnings, August 1st, 2014. This goes on to the statement of changes in equity. And we use this balance to arrive at the ending balance over here. So we took this beginning balance of 17,940 plus the 3,600 net income minus the dividends declared 12,000 to arrive at the 36,540. Rent expense and income tax expense, these are both expense accounts on the income statement. Supplies and trading investments are both future benefits. They're assets, they're current assets. Then we have bank loan payable due December 31st, 2015. This is within 1 year because remember, we're doing it July 31st, 2015. This is within 1 year. This is, within 1 year. So that's going to be current liability. If this was 2017, then it will be long-term liability. Very important. Then we have interest expense, which is an expense, which goes onto the income statement. Now let's actually prepare the actual statement of financial position. So once again, step number 1 is a 3-part title. We have Bay Truck Corporation, company name, the statement of financial position, the statement name, and July 31st, 2015. As you can see, it's not for the year ended because that only comes onto the income statement, the statement of changes in equity, and the statement of cash flows. The balance sheet is just at July 31st. The first main category we have is that of assets. Now, assets can be split up into current assets. Remember, current assets are listed in the order of liquidity. So liquidity is what we could convert to cash the fastest. So current assets, we have cash of 5,060. We have trading investments of 20,000. Trading investments of 20,000. We have accounts receivable of 17,100. Accounts receivable of 17,100. And then we have supplies of 1,500. Supplies of 1,500. So students always ask me like, hey, in the like, what's the difference between inventory and supplies? Because these are two different accounts. Supplies is things such as paper, pen, calculators, stuff like that. Like every business needs supplies to run their business, whereas inventory is what we sell specifically. So if in our water bottle example, our supplies are the actual water bottles. And then people even get equipment confused with supplies and inventory as well. Equipment is what we use to make the inventory. So there are three different accounts altogether. In this case, our total current assets are 43,660. And now we're done with our current assets. So now we're going to shift our attention over property, plant, and equipment. So we have equipment, which is 35,900. Subtracted by the accumulated depreciation, 6,000, gives us the total carrying amount and also the total value of property, plant, and equipment of 29,900. Remember, this is the totals column and then the subtotals column. Then we can calculate total assets because we have no other assets now. So as you go through this, I want you to kind of use this as a checklist, right? Supplies expense, we use that to calculate our net income, cross that out. Utilities expense, we use that to calculate our net income, cross that out. Equipment, we just used it over here, cross that out, etc., etc. So to continue, next we're going to deal with liabilities and shareholders' equity. So we're going to take the current liabilities first. So in this specific question, there are no long-term liabilities. The only potential one that could be long-term in nature is bank loan payable. However, this is due December 31st, 2015. So this is current in nature because once again, we're doing the balance sheet for July 31st, 2015. If, for example, that this was December 31st, 2017, then they'll be long-term in nature. However, that's not the case for the specific question. So current liabilities, we have accounts payable of 4,220. Accounts payable of 4,220. Then we have interest payable of $1,000. So interest payable of $1,000. So as you can see in the specific question, we have interest payable and interest expense. Interest expense is an expense which goes onto the income statement, whereas interest payable is a liability which goes onto the balance sheet. The bank loan payable is 21,800, 21,800. And since we don't have any long-term liabilities or non-current liabilities, our total liabilities are going to be these three added together to arrive at the 27,020. Then next, we're going to shift our focus over to shareholders' equity. So if you recall from prior videos, to calculate shareholders' equity or to calculate the common shares and the retained earnings balances, we need to derive first the income statement to arrive at net income. Then we have to do the statement of changes in equity to get the ending balances in common shares and retained earnings. However, for the purpose of this video, I gave you these balances right away, just because in this video, I want the main focus to be on the classified balance sheet. So just to recap, the net income is revenue minus expenses, which gives us our net income of 3,600. Common shares ending balance is 10,000, which is taken directly from this over here because we don't have any issuance of common shares in this specific example. To calculate the retained earnings ending balance, we're taking the beginning retained earnings on August 1st, 2014, 17,940. We're adding net income of 3,600. We're subtracting dividends of 12,000 to arrive at 36,540. So these balances are once again from the statement of changes in equity, and these balances go directly onto the balance sheet under shareholders' equity. So common shares of 10,000 plus retained earnings of 36,540 equal to 46,540. And then the last step is taking total liabilities of 27,020, adding it to total shareholders' equity of 46,540 to arrive at total liabilities and shareholders' equity of 73,560. And as you can see that total assets now equals total liabilities and shareholders' equity. So this is a very important question. I highly recommend that you guys redo this question multiple times, as the classified balance sheet is very important within the language of accounting.